So there's another thing out there that's coming out this year, this coming year, at the end of next year. You might have heard of this. They call it a qualified opportunity fund. Has anybody heard of that, or qualified opportunity zone?
Yeah.
Yeah. So they're coming out with version 2.0, which is great. So that one, if I have any sort of capital gain, so I go sell my business, I've got a lot of gain, or I sell stocks or whatever it is, I can throw money into this opportunity fund. That fund, I get a couple of perks. I don't pay tax for 5 years at all. So no tax. If I take that money and invest it into what the governor is going to view as, say, rural, some sort of rural space, I get a 30% decrease in what I will pay in taxes. That's big. So if it's $100, I pay tax on 70 cents or $70. That's not bad.
Is this specific for capital?
It is. But it can be short-term or long-term. So if you want to do crypto mining in the next couple of years, have at it. You want to day trade, have at it. No tax for 5 years. But that, if you invest into the rural space, have those communities, you invest into that, you've got some massive perks. The other really big perk is if you hold it for 10 years, so you're developing it, you're growing that community, you're doing all those things. If you sell it after 10 years, after you've already paid that tax, say you threw in it was 100,000 and it grows to, say, $1 million, all of that gain that you've got here, after 10 years, you don't pay a penny. So you'll never pay capital gains when you sell it. It's pretty neat.
I didn't catch too much, the 30% exactly.
So if you invested into some rural market, and if you go online and Google opportunity zones, you can pull up maps and it'll show you this area, it'll show you anywhere in the US you could invest. If you invest into rural, you'll get a 30%, they call it a bump in your basis. So if it was $100, you're only paying tax on 70. If it's urban, you get 10%. So you still get a little kick, but after 5 years, you got to pay tax. But it gives you 5 years to figure out how to pay that tax. And even if you had to sell this property to pay the tax, we already got an increase in your basis of 30%. That's not bad. It takes a little bit of that risk off. Woo. I love it. I love it. Does this give you some things that maybe you haven't heard of? A little bit? Just, I would say big things. Ask your accountants, ask your attorneys, are you maximizing that 199A? That'll free up a lot of cash. If you're selling, am I in the right business structure? And to find those things out, do that informal valuation. Get with Randolph, we'll do that for you. Let you know anything that we saw that maybe your peers are doing. We can get you kind of going.
But if they were doing the CRT at 100%, it doesn't matter if it's an S corp.
Doesn't. Nope. It doesn't matter if you owned it outright, if you, anything you want. Could be stock that you've got. Yep, anything that's got a lot of gain, these are really good tools. I love it. Well, I appreciate it. Y'all, late night dealing with taxes is great.